Hey, hello, hey, investors. Welcome back to the Trend Trader channel. So we're hoping that we are live now. I just want to confirm with another device. But in today's live session, I just want to talk a bit about how to handle a market crash. As we see at this moment, the stock market is under severe pressure, especially if you look at the US market, which has been under severe pressure for quite some time since the end of 2021 coming to 2022. The JSE remained strong for quite some time, but eventually we caught up that flu. Then it started to be a bit weaker. Let's get some proper lighting here. So now what we see in the market is just a continuous weakness either from the JSE or from the US markets themselves. Or yeah, the US market, I'm talking about the New York Security Exchange and Nasdaq. The market that quickly went down was Nasdaq. The tech sector has been under severe pressure for quite some time compared to the New York Security Exchange. If you look at companies within the tech sector, late last year we saw Netflix going all the way to about $700 per share. And then when they reported earnings at the beginning of the quarter, earlier this year in 2022, they missed earnings and then the share price got hammered. But I mean, some people, they still believed in the Netflix story, and there's nothing wrong with that. Let's just quickly go to the Netflix chart. So if you look at this chart, we can see the weakness that we experienced a bit. So let's see, where are we? Okay, there's going to be a bit of a latency there. So what we mean by that, we were saying that Netflix, it topped somewhere here around 700 rand, 700 US dollars per share, not 700 rand, around 7 US dollars per share. Then when the earnings came, that was somewhere around in January. As you can see, the earnings, the estimate was 0.83 in terms of the earnings, and then the revenue there, the estimate was about 7 billion. But the result, when they came at that time, the earnings were slow, and then that's when the market started to be hammered. That was around the 20th of January. So here we saw that there was this gap down. Let me see if I can move this arrow. So yeah, we saw that there was this gap down, but because people, they are always hopeful, they were hoping that Netflix was still going to remain profitable. Unfortunately, it didn't. The people that managed to exit somewhere around 500 US dollars per share, they were able to save themselves from the carnage that took them from 500 to about 270. But the 270 US dollars is something new, as we saw that, and then again they missed earnings here. As you can see, the surprise, they were down by about 61 million. There the estimate was 7.92 billion, and then they reported 7.87 billion there, and then the market responded negatively to this result, and then as a result we saw that the share price started to take a serious dip there. So from a trading perspective, there is no need to buy this particular share because it is on a downtrend. It is not the only share that is on the downtrend within the US market. There are plenty of other companies that are in a downtrend. Just to show you a couple of names, one company that was promising, even though the numbers were not that great, is Tesla. When Tesla came out with those results, because we had seen some weakness in some other names, some people were already expecting weak result from Tesla. But if you look at Tesla, when the result came out, we had this big bounce going to about 1070. That was before the share price, then it stalled a bit. I will just put in this key support level there, and then try to get I just want to get something that I can use to draw there so that you can see where I'm pointing. So we're just gonna use a pick pen. right? Yeah, now we have Epic Pen. So the result came somewhere around this level, and then we saw that it went up a bit, trying to reach about 1,100 US dollars. Since then it has been trading lower. From our perspective, as long as Tesla is trading above 900 US dollars, we are comfortable with keeping that position. But as soon as Tesla starts to trade below 900 US dollars, then we are going to be bearish. The funny part is that Elon Musk asked Bill Gates if he still has a short position, but there's nothing to short here. The market is looking fine, even though there are some challenges. The market that is a perfect short candidate from our perspective is actually Microsoft, and Microsoft has results that are coming this week. So we'll see how Microsoft is going to report. We're just going to look at the previous result of Microsoft and then see where it's going to come. But the levels of interest that we are currently looking at this moment from Microsoft, we saw that previously it broke above this resistance level, and then it came back, it found support here a couple of times. So at some point we're expecting Microsoft to trade above this 300 level, but it failed. Then it kept on coming back to this previous resistance, which now turned support. So at this moment the share price is playing around this support level, which is about $280 per share. But as you can see, the price is now around 274. We've already highlighted this previous resistance, that if this share price fails, then we can see Microsoft coming down to touch about $260 per share. So then we are just waiting for the earnings. Now if the earnings are negative, or the market perceive the earnings to be negative, then we wouldn't be surprised if we see Microsoft crashing down to that level. That is some of the tech companies there. And another company of interest is Alphabet. Doesn't matter which ticker you use for Alphabet, whether you use GOG or you use Google, but it's the same thing. Remember, there are different kinds or classes of shares, but the way that we see here, we're looking at well, I don't want to buy a pen. So what we're looking at this support level that was broken. That support level is somewhere around 2,500 US dollars per share. So when you look at the share price where it is, it's somewhere around this previous breakout level. That is where the support is at. As long as the share price remain above this level, it means that Microsoft is a bit strong. But if Microsoft fails to maintain that level, then what we are going to see the stock breaking below this level, maybe a bit of a retest before it goes down. But we are not predicting anything. We're just going to wait and see. Some of these positions, we are just on the sidelines. We don't have a position in the tech sector at this moment. We had some positions, some of them they worked, some of the positions they failed at some point. If you look here, well, we created a video in the past talking about Apple. We haven't covered Apple in this session, but we don't have a position at the moment on Apple. We're looking to buy Apple anywhere above 183 US dollars per share. But if you look at this, you can tell that it's been failing to break above this level. So where Apple is at this moment, we're looking at this level. Hopefully it will be able to remain above this level. If it does remain above that level, then we can expect a bounce going back to about 180. But then again, it will depend on the kind of result that Apple is going to release. If they release weak result, then we can see Apple crashing below this level. Then this will be the next area of interest, that is about 140 US dollar per share. So there are so many ways that these things can play out. We're not predicting anything. Where we have position, we are just adjusting our stops, bringing our stops closer. Where we don't have position, we are planning our trades. Which levels are we going to trade if ever the market move around that. Then we also had a position on AstraZeneca. This is a pharmaceutical company, there. So it just shot up when we're trading this level, this breakout. It shot up from about not 60, we were looking at this breakout somewhere around $65. Then it went all the way to about $72 before pulling back to this 65. So what we'd like to see with this pullback is that it finds support somewhere at this level, and then it reject lower prices, and then it continue to trade up. That is the plan. If it does reject the lower prices, then we will remain in this position. But if it closes somewhere below about $64, then we will exit that position, because it will mean that our long position has been invalidated. Remember, whenever we trade, we are trading probabilities. So if we see that the market is moving against us, it is important for us to preserve cash rather than to try and justify why we should continue to stay in the position. Another position that quickly failed, we had the position on CHAP. CHAP is a security company. The position was promising at some point. That was before there was a nasty pullback in the name. Once again, we bought a breakout here, so we saw that the stock attempted to break above this level somewhere around 195. Then it came back to retest, rejecting the lower prices. That is when we entered our long position with the stop somewhere. So we were able to push all the way to about 220. As you can see at this moment, the stock is on a downward trend, so it's coming back to this level, coming back to about 195. Again, similar with the other position, we want to see if the stock is going to reject the lower prices and find support here. If it does that, then we expect the share price to continue to move up. But the worst case scenario is that the stock, it fails to find support here, then it break below this level. Then that will mean that it will come back to about $170 per share. So there are plenty of scenarios that we are looking at in the stock market. We don't just pray and hope that things are going to be fine. We want to ensure that we plan the levels where we are going to trade, because if the stock market or the share prices remain above those key levels, then we are able to maintain or keep our position. But if the share prices fail to stay above those certain levels, then it means that we are going to exit those position. We do not believe in staying in a position simply because the market, or we believe that the company is good. To us as traders, there is nothing as a good company. Even if the company is good, we also plan levels where we're going to be buying a dip. As you can see, a lot of these dips recently, because the S&P 500 and the Nasdaq are both weak, so it's easy for the pullbacks to fail. So if you are using a strategy that is buying a dip, you don't be surprised if those dip they keep on dipping, because the general market is weak at the very moment. So if it remains weak, then we expect it to continue to be weak, meaning that. So let's see where we still have promising position at this moment. Recently we took a position on Realty Income. So for those that don't know, Realty Income, it's a company that buy and lease real estate investment. So those real estate are being leased to different companies, and that company pays a monthly dividend. So that's one of the stock that we added into our portfolio recently. So now the way that we see it, we're bullish on the name, but once again, the general market is bearish, so we wouldn't be surprised if that position it starts to fail. Right, I see that the internet is getting worse and worse, so instead we're not going to continue with this analysis. We're just gonna make a video, then we'll upload that video. If you have a company that you want us to cover, please write there in the comment section the company that you would like us to cover. Then we'll make a video covering that company, because at this moment there's no point continuing with this video.